Here we are, MMTs. We have Google. And we are taking a look at the pre-market print. And Google is a special feature with MMTs and how they marked up that 580 call yesterday, finally. And they did. And they marked up that 585. We've got the lows yesterday of 370 and the high, so that was the markup. Now over here on this side of the market, MMTs, we're all very well aware that the 590 put got marked down $6.95 yesterday down here now. Okay, just like that the call at one point, as you know, the 600 was down to 25 pennies yesterday and then breaking higher to 2.05. You were limiting out into strength to protect capital risk. $600 call went straight up. We're going to take a look, and we're going to put some bids down here right now on that first pass of about 65 pennies. That's our limit in right now. Yes, the last print was $1.80. That's what we're going to be doing. It's here, it's now, it's live, it's pre-market, 5:45 a.m. Pacific Standard Time. Let us not forget, it's a Friday, it's 11/4/2011, with the 9.0% unemployment number reported. Do they really believe it? Well, here is that we're going to take a look at this 60-minute chart on Google. Here, MMT, live right now. Watch and take a look at that 60-minute last hourly breakout bar that happened, because this is where okay, so right when you were going through this key area called resistance with the public now, the buyer and the seller. Okay, so let's keep that part correct, and let's take a look at where your upper end of your price levels are going to have as we open up today. The pre-market bids are 594.60 or 594.51 by you can see the bid and the ask. Look at how wide that is, MMTs. So what you do in a case like this with that drop down bid, you would go over here to your 585 call right here. Based on this gap down, you'll put a limit order out right now, MMT. You'll line, let's say, 3 contracts to limit at 850, and then let's say you have 2 contract limit order also at 870, and you can even scale the entry at $9.20 or $9, let's say, 40 cents on 2. So if you have those entry levels down below that market, so if they do mark that option down, because it'll expire today now, so it's where that wholesale market would be based on the fact that that bid and that ask is $2 wide. I mean, let's be real. The public doesn't know how to deal with this in pre-market. We do, and we're going to open up, but we're featuring Google on the calls that got marked up yesterday. This is that 60-minute chart right here, and it's very important that you know that this part of it right here is all a public monitoring system between the buyer and the seller, and that's what we have. So when they clear through here, this 600 top right over here, like I said, that's right up there. You got to get through that. But here's the thing. 599.62 is where we would have to have the same buy and sell tape as we had yesterday when they were marking the calls up off the low from 670 to the high of 1750. That's a markup. And that the equity was because of Europe. They had marked it down. Here it is on a special with the MMTs to put bids out there that I just described. The other thing that I like doing as a market maker is I'm going to put alarms on this 580 call. Falls to, let's say, 14.75, 15.10. So it's 14.75 by 15.10 on a low end. But then we start getting down in the 13.70 by, let's say, 14.05 area. And then below that market, it's a 12.90 by 13, let's say 13 would be like 13.40. In these options, if they, want to mark those down. But if they're going to mark the calls down, they're going to have to mark up the puts. That's this market over here, MMTs. Okay? So, there's that gap. There's that bid. There's that ask. Hey, 594.51 is the buyer, and the seller is 596.44. So what we're looking for on the open is where this side of the market takes out the bid. So, bam, that print runs up, and then they go straight up in the morning. We'll find out. However, the 60-minute chart MMTs are right here, and in your MMT application, you will know that you'll have a lot of MMT diamond alerts that tell you what happens when you blow through here. One of the trade management scenarios is they drop these bids down, they hold, we go straight up to that 599 area, around 599, let's say 57 pennies. So that would be $3 higher, 599 plus 57 pennies. It would have to be, and that's $3 above the market. And that would be coming over here in price action and challenging these price action levels. And when you break through there, what you would want to see is 3 teeny bars are mandatory qualifiers. So the bid and the ask outside of the 60-minute chart is when we look at this 585, we look at getting entries down in here. Somebody should set an alarm right there at about the 1020 and the 1070 area right here on the 585 call. Because if they print this side of the market down, there's 597.50. If they print this side of the market down, they drop the bids over here now. And what they'll do is in the short term, this $600 call, we're going to put bids in here. I'm going to line this bid right here at 35 pennies, 50 pennies, and 75 pennies, and 85 pennies, all 10 contract limit orders in those price ranges. So, but we'll monitor what kind of premium they take out of here. If you have a limit order down here right now, let's say at 55 cents, you can't lose. So put a limit order out here on the opening bell. When we look at that kind of bid and ask, if this side of the market walks away, they print lower, that will mark down the value of the $600 call. And it will mark up the put side right here, the 590. It got cheap down here. So let's say you had a limit order out here at 25 cents. You would put the limit order. Remember, yesterday's high was 780. They marked them down to 6.95. So the thing about it is, if they mark this opening print lower from the close, as they're doing on the bid side right now in pre-market, hey, it's 5:53 a.m. Pacific Standard Time. Markets don't open up for, getting closer, and all the headline data is out. Everything is live, and if they mark that side of the market down, they're going to mark this down. But then they're going to hit support, and then they're going to take off. This side of the market was marked down yesterday on the put side. So, yes, when they mark down this bid, they're going to mark this up. As they're marking that up, put your bids down here. Line some bids down here on that entry. because they could come down and hit you. So you could start at 35 cents, you could start at 45, work your way to 55 pennies on 10 contracts each. Do it in that. That is your limit order structure here on the opening bell. Because if they print this side down, MMTs, and you learned about it yesterday, and you know exactly what I'm talking about. If they print this side of the market down, they're going to mark that down, they're going to mark this down, and that 580 call that here for that 1119, they got it up to 2340. See, now that was one we could hold, and you can see here it got a $7 gain. And that's a markup value because they were marked down over the European news. But then they got their markup yesterday. But today is the expiration. Watch the put side of the market. Keep your bids out below the floor here. Okay? And on the 580 call, for people that want to get in this one, you would want to have limit orders out here starting at 18.75 and 19.25 below the market. Just depends on what they do over here on the open, but that would price an entry in that 11.19 580 in the money. But the people that would, if you do get it, you're going to have to go over and get the put side very cheap. You're going to have to get that put side of the trade first. Then you can have the luxury of getting a call, because the put, as Google goes higher, the put side's getting cheaper. MMTs. So there are entries and trades in here. You just have to understand that yield. That here's your yield, 1580 to 2340. Okay, that's the actual yield. The close, there's where the market was made, 1580, and that was in the money 580 call on 1119 up there. And that was buying it down there at that wholesale bid because it marked the call down. So anyway, now the call got $7. It got marked up. And we want to look at how we're going to get an entry, because now that Europe should be out of the way, Google can go about its business and go ahead and start traveling up to that 650 handle between now and year end. And what would that mean? It would mean that fund managers would have a commitment, and hedge fund managers, institutional money managers, and everyone alike in the Wall Street community tape, and that their engagement would be, hey, I'm going to mark this up because this is a valuable company and it makes money. And quarter over quarter, it shows its positive strengths in its business models. So therefore, you know, where is that money going to show up? In the longer term, 2012, SMF has a special private report that can be purchased on Google as to what its fundamental analysis will be and how it will trade. So that's the feature here. That's the bid. That's the ask. They're starting to contract in pre-market. It is 5:57 a.m. right now. It's live, and it's 11:04, and it's how do I get an entry before, and how am I going to get that entry when that opening bell comes around, and how do I know where my price action drop down bids are going to be support level, and how do I take advantage of lining the bid over here on the entry? Even though that they marked them up, they can pull them back very quickly on the bids and then make the markets again. Google is going to have to trade strong off of the bottoms when it gets down here. So let's say it does get down here in our brain somewhere around, let's say it happened very quickly. Say it happens at 592.50, like, you know, that would be the support level yesterday, or the resistance that you had to get up to get to the 595 handle, and you're right back in that pocket in the price action right now in pre-market. That you are. Remember, everything that we do here is we're doing it here together, and you can see the prices, and you can see the close is $597.50, and that's a $2.50 markdown right there to $595. And that's a markdown bid that MMTs learn how to get down in here. So they're going to take a look in the application and get all the entries lined here in the 585 call, 585, 580s. Here's the 580s are tradable now today. And if they mark this down, put live bids down here, I would say start the bid at about 1250 by 1280 on this one right now. 1250 by 1280 on a live bid right here. Bid 1250 ask. Let's see if they open it up. How much premium are they going to take out based on they print 594.50? So this side of the market printed down MMTs, and price action once again is how they mark this side back down. They're going to mark this side up on the open if they keep printing lower, and we'll know in 31 minutes to the opening bell, and we'll see why and where they're going to mark that down to that price support. But then you're going to turn right around and come back and break this high right here. That's at 597.50 previous day's closing price. Yes, you will. You'll know, and it's our breakfast morning, by the way, so it's 594 by 595. So we do apologize. It's now 594 is the markdown with an ask of 595. It's here, it's live. So how do I take advantage on the opening bell in 30 minutes? It just depends on how far they'll mark it down to the wholesale bid, and they'll take the premium out of the call. That's right here. They'll take the premium out of here at the lower bid. They marked them up yesterday. Marked that one up $9.30. This one here. And this one expires today. This is at 580 in the money. So look at here. They're printing 594.50s at 6:01 a.m. Pacific Standard Time. It tells you the print. 9 o'clock, 100, 900. They're your prints. They're your markdowns are going to happen over here. They're going to mark that down. They'll mark up the put. Then the put will reverse, and then the call will bounce. That's based on you getting hit at, take a look at what 3 teenies, 5 teenies, and 7 teenies down are. That's the special feature on expiration where they walk the calls, marked them back up yesterday on Thursday. That would have been 11/3 of 2011. Now today's 11/4. Okay? And so we take a look at 597.50. They mark this down. They're going to mark it down, and then that's when we're going to teach you that the markdown is at wholesale bid for the MMT. And when that thing hits and that thing immediately reverses on the opening bell, and the more that they mark it down, the more we're going to mark down the call. And then the put side's going to get marked up. Here's that 590 put. They marked it down 6.95, and it's today's expiration. Last print was 95 pennies. That's why we were trying to get hit yesterday down here at 55 pennies. Because at that point, the risk at 55 pennies is okay. No doubt. It got to 95. They're going to gap up on the opening bell. How do they gap this up? They got to keep marking down the equity and value to gap the put side up. So in pre-market, once again, they mark that down. They'll mark that up. That side would sell out, and this side would enter in over here on the call side at those first wholesale levels. Remember that the risk management side is always understanding that there are different tier levels of price action in the entries, and it just depends on how much premium that they're going to take away from the public in the electronic opening bell. True story. Special presentation on Google expiration. Today's date is 11/4. It's on a Friday with the jobs report that just came out. And everybody is liking the jobs report. You hear me? And they are. You can take a look here. We're printing. So as they mark that tape down, they're going to mark this back up. And they're going to mark this down here. This is why I'm giving you entries. So as they mark it down, then I may change my entries over here. Just remember that it is a special presentation. Start your bids at 35 cents. Just start them there. 35, 45, and let's say 55 cents. Okay, they mark it down there. That was the markdown yesterday. They flashed the $1.05 high yesterday and then dropped it to 25 pennies. And then you can see what happened later in the day when the equity was working in your platform on Google. Now, we'll be taking a look at a lot of November contracts. We'll be taking a look at the New Year contracts on Google, and that is where the SMF, Pro Company Analysis, comes into play. And what do we do at that time is we talk about the pros and the cons of the company, what the facts are, how they're executing in their business model, and so far, Google and the longer term fundamentals, and we'll have a special private one on the fundamentals. Okay, that will be a different video. So if you have an inquiry, simply fill out the form and we will respond to you. 594 is a markdown bid. And I'm going to conclude this special video on the opening bell Friday for the MMT 52-week market making school and how to make a market between the public and what are the mechanics and what are the tricks of the trade and how does the headline news play into everything and everything that goes on. So you're getting a markdown at 594 right here. So when they mark that down, they're going to mark this down over here. They're going to mark this down. They're going to mark the calls down in value. That is the 1119. Anyway, MMTs, we're looking for an immediate reversal off of that opening bell. That's when that call puts in the low. You get a contract. As it goes up and it starts to set, if the contracts are 50 cents higher, it's okay. We can buy 3 more as we scale that lower wholesale entry. Yesterday's low was 370. And it's a long day. And we know what can happen in the last half an hour when program trading is present on Fridays.